Hello everybody, I'm back. I know it's been a while since I have been live on YouTube, but I managed to move house, survive a heat wave. Can't sort the sound out there, can I? Let's sort that out. There we go. Sound corrected. Hope everyone can hear me okay. Now, hasn't it been dire, like really dire for Bitcoin for the last month? You know, there's nothing worse than a sideways market, unless, you know, when a market does go sideways, the way Bitcoin has for the last couple of months, the only thing you can do is really kind of lower your horizons. If you're somebody who normally is a day swing trader, you really have to kind of go down a time frame and lower your expectations. Viz, you dare to collide with Trader SZ live stream. You know, I've been doing Monday nights for, I think, 4 years now. I've only taken a couple of weeks off, and I see that he's slid into Monday night. If he wants to do that, that's fine. Really, honestly, if you don't want to listen to me, seriously, go back to his stream. I don't care. I'll block you if you like, then you don't have a choice. Really, honestly, I put this out free for people. If it helps you, it helps you. If it doesn't, it doesn't. So here we are in this pretty nasty sideways market in Bitcoin. What's really interesting about this zone, if we go all the way up to the weekly, we can see that on a weekly chart, we have every time we've been back down to this 30,000 support level, we've found support and we've fought to really get off. The problem is that we haven't, you know, managed to reverse the trend. That's the problem. So we are grinding along on this support, but we haven't done enough to turn it around. If you are a candlestick trader, one of the things about Japanese candlestick traders, when you have these large move candles, then very often the 50% mark of the open close on an open close becomes support and resistance. And it's also a really good sign in Japanese candlesticks that you've reversed the trend when you can go beyond the 50% mark of one of these big thrust candles. And that works on every time frame. So this is a weekly chart, but that works the same on the daily chart and so on. So when we look at these big down candles, you can see we had a big down candle here. When we closed more than 50% up, we saw some follow through. Here with this big thrust candle, which we had at mid-May, the really kind of tricky one, we haven't, you know, we tried for 4 weeks and we couldn't close back above the 50% of this candle. And so all the time that we did that, every time we rallied, sneaked above it, but closed back underneath, we were, you know, still technically in a weekly downtrend. And here, you know, with these candles, we've had the same thing. You know, every time we've had a red, we haven't managed to. Each time I would say, even with the tiny reds, if you can close more than 50% up of the previous day's open close, then you can have a go. Zero Hedge reporting wells accumulating again. You know, these tails, these candlestick tails tell us that somebody is accumulating at 30,000. The problem is, if we look at our big fib levels for this big wave 3 that we're in, then potentially we have room to go down to this 61.8 retrace level. And not only that, but we could extend beyond it, because 61.8 fib retrace levels can be, you know, kind of messy. You'll go beyond it. It's not a very clear-cut line, whereas a 786, say, or a 50% fib level is often much sharper. Here, there was no question last week when we closed underneath this 50% level after holding it for 8 weeks. If you look, 8 weeks, we dipped underneath this 50% line. And then last week we closed underneath it, and now we're seeing follow through lower. Today we are underneath the weekly 50 moving average, which we don't want to stay too long under here, let's put it this way. But it does point to, if we, you know, I think it would actually be almost more bullish if we broke under this 30,000 support and tagged that 27,000 and bounced sharply back up. You know, there isn't really much more bullish than a false breakdown, and vice versa. You know, a false break higher is also potentially a bit of a nasty bearish trigger as well. So if this was to happen, if you're holding on still, I think that potentially we have room to sneak down to this 26,700, 27,000 level, and then I'd be looking for a really sharp bounce. So let's see. Otherwise, I'm afraid, gosh, I really can't see, you know, this. A lot of people are looking for a retest of this 20,000 level. I think that this is a high of wave one. I think it would be very weird and look very weird if we went down there. I'm a much bigger fan of the idea that we will find some support in this zone. So I would say at this point, you know, having made our high back in April, I think we're much closer to a bounce level and a turn higher than we are to kind of a bigger move lower. But, you know, until we see proof that we're going up, we're still going down. That's the problem. And so trying to buy it whilst it's still going down, yeah, you know, so we need to look very carefully at what we want to see for it to be clearly saying it's going up, because you don't want to try and catch the low and then just, you know, get your hand chopped off. It's not funny. Okay, and when I look at all of the crypto charts, we were talking in my group this morning, when we look at all of the crypto charts, you know, everything seems to be in a downswing in crypto. So if we look at this is CoinGecko. So if we look at the performance over the last 7 days, and we see, you know, which altcoins are outperforming, which are going up versus the dollar, say, the best performer, certainly for the last 7 days, is XEM, NEM. If we take a look at how NEM has performed and see, you know, remember, if a market is in making a corrective move, it's usually a 3-wave move, and a impulse move is usually 5 waves. So if we look at NEM, what we want to see off the lows, ideally for the first sign that we've made a bottom, is 5 waves up. And so if we go to crypto, XEM, here's NEM, here we go. I'm going to go to the daily chart, and unfortunately, yes, has NEM performed really, really well? Yes, it has, but it's made one of those 3-wave corrections, equal measured move. And so that says that this whole rally, even though it was really nice and impulsive looking or feeling, especially because it was outperforming, is still only a correction. Daily moving averages here are still bearish. The 20 is underneath 50, and so on. And so still in a downtrend with an ABC. So that's the best performing over the last week. What else is going on? When I look at, for example, header hash graph, H bar, let's take a look at that one. I can't remember what page that coin is on, so hold on. As usual, this is what we looked at this morning. All of these ones, even though the ones that are kind of putting in a pretty decent performance, here's H bar, still in a downtrend. When I look at this, 3 waves up. If this was going to be bullish, 5 waves up. Bigger picture, I'm kind of favouring a bottom around here for H bar. I think that we've made an equal measured move lower, and so that's kind of what I would be looking for a kind of ideal pullback. The problem is that this was quite an extended wave 5. So if I put it onto log scale, you can see that we made this whole last wave up. So we've gone 1, 2, 3, 4, 5 here. This was quite extended, and you very often come back and test the bottom of this previous low, And so potentially with this, we've got a bit further to fall in H bar. So that one, still bearish, still underneath our daily moving averages. The 20 and the 50 have now crossed underneath the 200. That's a bearish cross, these moving averages. It's not the kind of look that you want to see. So what's driving all this? Well, first of all, the dollar. One of the biggest factors of moves in crypto and moves in all commodities and anything priced in dollar basically is the US dollar. And the dollar has broken out from a sideways consolidation range that we've been in for the start of the month. So all of the big moves today have been pushed by this potential breakout. It looked a bit like we might not break out, we might not close outside of this sideways range, but we've recovered a bit in US trading, and it does look like we've got further to go in the US dollar. So if this was going to just be a correction off the lows in the US dollar, and we were going to make an equal measured move in this, we have got further to go to get to that equal measured move. It's at 93.76. I thought we might stop here at this 61.8 level, but we haven't. We've gone beyond it. It's now support at 92.14, and so we stay bullish this US dollar as long as we're above this 20 moving average and this $92.14 level. And so until I think that gets up there and reverses, probably not a good time to buy Bitcoin yet. Okay, let's so a breakout, and this has meant that there's been some really quite nice trades today, or there are some quite nice setups in FX. If you trade FX, I'm dollar against the South African rand. Looks like we're about to get back above that 20 moving average, 200 moving average, sorry. That would be a really good sign of a bottom here in this 5 waves down. So we'd be looking for at least a 3-wave move up in this dollar rand. If we look at this dollar Canadian, we've had a really nice move in this one today, back above the weekly 50 moving average, which was resistance this morning. Look at this lovely break above this highs and the 200-day moving average. So dollar Canadian, all of these currencies are pointing to more upside for the dollar. Nasty breakdown for the Aussie dollar, and so more to come, I think. I really like it, this Kiwi to play follow on. Also this support that we've been holding for since February in the pound against the dollar, 137 level. That's gone today after a double top. You know, when you have a double top, this is the pound against the dollar. When you have a double top like this and you break the low in the middle, then classical technical analysis says you go twice the distance. So your target for the pound becomes twice the distance of this consolidation range, which very conveniently takes us in the pound back to the 200-day moving average at 131. So we're at 137 at the moment. 131 is our target. That's 600 pips. So that's quite a nice, so some really quite nice trade setups in these currencies if you trade currencies as well. It's also really bearish, not just for Bitcoin, but for gold, for if we take a look at the daily in gold, we've had a really nice, nasty reversal today at the 200-day moving average in gold. This also looks like an ABC correction. Silver's quite a good leading indicator for metals, and we've lost this daily 50 moving average, so back to the bottom of the range for silver. And I've been really bearish in my group for a while now in oil. One of the reasons that I'm super bearish in oil, I'm going to go to the monthly chart. So this is the monthly chart of crude oil. This is the high all the way back in 2008 when we had that the credit crunch basically, and oil went all the way up to 140 something dollars. This was the high, this is the low that we made. I've put it at 0, even though it went underneath. No, I'm going to go back to, I'm X at XD. I'm going to go back to crypto in a minute. I'm just talking about the bigger market because there's some quite bearish moves happening midsummer across the board. and I think it's interesting to talk about them. Okay, so here in the dollar, we've reached 50% of the entire, 50% is a very, very common retrace thing in a correction. So in oil, we've hit this 50% level from the highs in 08. It was always going to be a big deal, and this is a nasty monthly bearish reversal candle. Remember, if we were going to stay bullish, we would look for 50% of this candle to hold, this monthly 200 moving average to hold, and we would carry on higher. The interesting thing about a reversal at a 50% level is that you usually, mean reverting markets, so a mean reversion is back to the average, which is 50%, tend to keep mean reverting. So for me, my target for oil on this pullback here is probably going to be 50%. And that would mean all the way back down here to 38 to 50. And we're at 65. So I don't know how that plays out, but for me, that's a really interesting trade as well. If you trade oil, obviously we've dropped quite a lot in a straight line. I prefer to sell rallies. If I was looking at this 4-hour chart, I'd really like to see sell a bounce before I got back in. Similarly, in Brent, we hit a really big level in Brent oil. And we hit the monthly 200 moving average. That worked exactly as it should. It's been pretty important support and resistance before this one. And so, yeah, I'm pretty bearish. A lot of things priced in dollars. And so that's not very good news for Bitcoin. Well, zero. No, I'll tell you what happened, Squidgy Ball. Okay, so what happened in, you see that the low here in Brent oil only went down to 15. The low, though, in the WTI oil went negative. Here's the reason why. Okay, remember, these are futures. So, when you buy perpetual futures in Bitcoin, they're always cash settled. But if you buy in oil, you're buying that month's oil, unless you roll it over. Well, they had supply issues where they couldn't get the oil. They basically ran out of storage in WTI and couldn't get the oil out. And so they were literally paying people to take it away. And that's why the oil price went negative when it did last year in 2020. Now, I don't think I didn't put my fibs on a negative price, but I think it went down to like negative 17. But, you had to have a way to take it away. Otherwise, you get penalized. So that's what happened with oil. So we think that the dollar has broken out. It might be a false breakout. It might stay in this range, but I think with these measured moves that we've probably got more upside for the dollar. And so that means that we have got more downward pressure on crypto generally and all of these things priced in oil until we get to at least our first target. So a little bit further to go. Not quite time to buy Bitcoin yet, that means, unfortunately. So we just talked about it. I do think that there's very good support in this 30,000 level. I think that we might make a false breakdown a little lower, shake everybody out. And the reason is, when you see tails like this says people have been buying. Now, not everybody is going to have diamond hands. Not everybody is saying, oh, I'm going to buy it every time it dips close to 30 and I don't care if it drops down to 20. Some people are going to have their stop at 29,500 or pretty tight because they don't want to lose a lot of money to find out it's going down to 20,000. And so when you see tails like this, the reason that you get a really nasty false breakdown is it's not people selling down here, it's the stops of all these people that have bought that are too tight. And so what happens is all of the they bought, so their stop loss orders are sell orders. So the sell orders of the stop losses all get filled. We get a nasty downdraft, and then there's nobody that wants to sell. Everybody looks at this and says, "Are you kidding? I'm not selling at 20. I'm going to buy here." So, and that's why we get those very sharp reversals. So I think because of all these tails that there is a risk that we will see one of those sharp downdrafts. We might overshoot because it's a 61.8, and then I think we should bounce back up again. That's what I'm hoping for anyway. If we don't just, hold the lows. I know Peter Brandt posted a nice chart of how, it is a good support level. People are accumulating here. Let's see if they defend the level. So there are some charts that are a little bit more bearish. One of them is this Ethereum chart. We've broken this support of the last 4 days sideways in this one. But again, we've got really good support here at this 61.8 level in ETH. This is a 61.8 level all the way from these lows. If it breaks down, what we will make here is a Gartley pattern, which is a really bullish pattern, trend following trend resumption. So if this 1732 level breaks, I would expect to move down to 1011, and that would be a gift. Honestly, back up the truck down here. These patterns are really kind of reliable. So could we go further? Could we go all the way? Yeah, I just think it's, if you're going to dip your toe in and try for a bounce to see 1,000, that, especially that big round number, ETH really likes big round numbers, and so I would expect to see a really good reaction at 1,000. Now that's a really long way down from 1732 if we lose that support. If you're still holding some and you're hodling it, please, at least sell some so that you can buy it back down here and you have a better average. What's the worst thing that could happen? You sell some and it doesn't go all the way down. It was a false breakdown and it bounces right back up again. That's fine, buy it back, but at least you've protected yourself a little bit. You don't want to kind of ride down another 40%, 70% drawdown if you can help it. Okay. Squidgy Ball said, you really thought there would be a big wick today, and about so did I. And that's happened to me quite a lot. Especially, you see it on very often, moves early on a Monday morning in Asian trading, and they very often are the high or the low for the week. They get reversed. If we look at the S&P though, that really didn't play out today. We sold off from the here was the open last night at midnight. We had a rally until 7 a.m. London open, and we've just been selling out the gate since the London open in the S&P. So yeah, quite a bearish day in stock indexes. Now my lovely colleague who helps me, LaShawn, asked me to talk about the 10-year note. Why is the 10-year... I'm going to talk about the 10-year note because this affects the dollar as well. Why is the 10-year note important, somebody said? Well, treasury bonds are the most safest investment that you can buy. They're backed by the US government. They are literally the safest thing you can buy. The problem with the treasury notes is that the Federal Reserve keep the yield, in other words, the return that you get on your investments in treasuries, really artificially low. So when you see treasuries going up, it means that people are nervous. They're looking for a safe haven, and they don't care that this, doesn't pay hardly any interest at all, because they just want somewhere safe to put their money. And so this is why. So the price of the bond is going up, is inverse to the yield. So when everybody buys bonds, the yield goes down. That's the amount of interest you get, and so on. what's quite interesting about this is we're pretty close to a back test of this daily 200 moving average. And if I take this away, I actually thought this was a bit of a bear flag here. But if this is clearly not going to be a big 5 waves down, is it? Because we've had the big low move down here, a 3 wave rally, and then a final leg lower. So this to me looks like a big correction. It's quite bullish, but we are underneath the 200 moving average. If we are going to continue lower, then this 200 moving average, or perhaps a little bit higher, this 61.8 level, this is going to become our resistance zone. And that kind of lines up, I think, with where the US dollar is going, which is also being bought as a safe haven. Remember, you know, if you buy, I wouldn't buy these at all. I'd be buying, the only bonds I would buy would be linked to inflation. I think we've got really bad inflation coming. I think if you buy the dollar and inflation is running at 6% or 8% or whatever it is, that means that every year your dollars are worth, if you buy just cash and put them under your mattress, every year your dollars are worth 6 or 8% less. I think they're a terrible investment. But, you know, that's just me. I'm a bit, there we go. So I thought this was a bear flag. One of the things though, when bear flags extend, we're still looking for those ABC corrections, and those second legs can extend. So we didn't stop at this equal measured move. If we go all the way up to this 1.618 level, we could turn into something more bullish. We would end up with 5 waves up, and this third wave here being, gosh, when it's 1.618 of the first one, sometimes that can be quite bullish. We might then be looking for, gosh, just another shallow pullback, a new uptrend, or uptrend continue. Inflation safe, which ones are they? In the UK, they're called linkers, and it means they're linked to inflation. So whatever inflation is, then that's what you get as the return on your bond, and they have them everywhere. Every country has them. So so a bit of a resistance zone. Let's these fibs are not really working here. Let's take this away. Let's just see this most recent swing. So I'm going to put my fib retrace tool on this most recent swing. I just want to see what kind of pattern we might be making here. It's not really talking to me. But yeah, I would say 135, 136 is the most likely resistance from here. And so that lines up with more to come more upside for bonds, more upside for the dollar, and that's really bad news for crypto for a little bit. But honestly, this is summer trading. Now, I'm going to go back to Bitcoin before I go through the list of coins again that we're doing, because if we look at this on a monthly chart, and I'm going to go to log scale. So most impulsive moves and most final legs at least are 5 waves. I feel like, so from the low that we made in 2018 after the last really nasty drop, I feel like we made a wave 1, 2, 3, and this is a big wave 4 that we're in. So this wave 4 should not come back below 14,000. This is not the high of wave 1. It could come back below this low, and if we came back to 20,000, would it be really good support and resistance? Yes, it would be amazing. It would just be quite a long way for us to come. I think it's more likely that we see 27,000 first, and we'll see if we can bounce from here, because this was quite a simple correction here at wave 2, and then I'm expecting something different, a different correction here in wave 4, maybe a wedge, maybe a triangle. I do think that pretty soon from here we're going to see a bounce, especially sentiment is so horrible. But because this took so many months. I think that we will do the same here in Bitcoin, and it may be that we don't see a low until, if we take the same amount of time, January. If this correction takes the same, and prices and corrections are very often equal in time if they're not equal in price. So what would that mean for Bitcoin? Well, if this is our A leg, I think we might see a very nice B leg, and then a C leg, and then we'd be finished. Now, that looks very much like this one, so that's probably not what's going to happen. What we might do instead is a triangle like this. Or we might do a declining wedge. So we bounce, we make a new low, we bounce, we make a new low. And where do I think this will finish? I've lined it up wrong. The beginning of January. So between now and the end of the year, I think we'll see a really significant bounce and really nice tradable bounce in Bitcoin. If you've been hodling and you don't like this drop from 60,000, then this next bounce, when it turns lower again, that'll be a good chance to get out and buy it back cheaper. If you're riding the waves, keep on riding the waves. But that is kind of what I'm expecting between now and the year end for Bitcoin. So maybe it'll be September when everybody comes back from the holidays. Summer trading is not always very much fun. A really nice rally in September, October, and then one more dip. Who knows? I'm not sure how this is going to play out yet, but at the moment I think that we are closer to a bounce than we are to a nasty. I might be wrong, but I'm certainly not going to buy it until I see evidence of a bounce. So what do I look for when I want to see a bottom? Well, anytime you see a double bottom, it means the market's stopped going down. When you see a double bottom, then you are looking for a reversal. You're looking at to take the high in the middle. You don't want to see, which is what we saw here in Bitcoin, ever is these corrective three-wave moves which are equal. Now, I've measured this one like here in Bitcoin. You can see it was to the tick equal. Sometimes you can just measure them simply, with your eyeball. They have that look, don't they? Like this. Whenever you see that and it heads lower and you take out especially that high, that's usually the sign of a correction. So I'm going to be watching, and the first time we get what looks like a really nice five-wave rally off the low in Bitcoin, I'm going to be looking for a 50% pullback to jump in, and we'll see where we go. For now, still, for all of these cryptos, all of them, even the ones that are in an uptrend. So one that we were looking at today, for example, was ASX. So AXS, my apologies. This is clearly in an uptrend. It's above all of its moving averages. It's not in a downtrend. This is a pullback. So this is a really cool one to stalk an entry in. And we talked about, where they have a really good tool on trading views to look at the ones that are in an uptrend and pullbacks. I think buying pullbacks in an uptrend is always much better than trying to pick a bottom in a really nasty downtrending market. Okay, I'm going to look at a couple of stocks. I've gone on and on and on, and then we're going to go back to crypto. So the first one we're going to quickly look at, which was requested, is Virgin Galactic Holdings, which of course they had their first successful mission, didn't they, into space. So just like the broader market, this one has been having a bigger pullback. What's interesting though, when we look at this, move lower, three waves on the weekly. So that says you clearly this was a correction. Bigger correction though going on. So very often, if this is our first wave, the second wave of correction is usually 61.8 of the first one. Sometimes it's a little bit, in this one, it's got a little bit front run, so we haven't quite reached that level, which is 27.52. But we are holding that weekly 50 moving average, so it might mean that we don't quite get there. I would say, first sign that we're going to go higher, if we close above this weekly 20 moving average again this week, that would say possibly this bottom is in. However, ABC up, down, ABC up, and then very often this is 5 waves. So I wouldn't be surprised if this does one more shallow and then down to that 27.50 before we go again. So it's very tempting the way it's holding this 50, but just because that measured move says maybe a little bit lower, let's see if that holds 27.52. So not 100% sure that this is the bottom yet. So obviously, let's see. We might instead do a little bit of a wave 4 here, and then one more before we bottom. Back above this daily 20 moving average, that would be a sign that the bottom is in. If we go back to the weekly, and back more than 50% of this big down candle, that would say that the bottom is in for this one for now. So if it's not the bottom, it's pretty close, I think, in Virgin Galactic Holdings. Okay, the other we're going to look at is Airbnb. This should be, you know, Airbnb has got to be one of the COVID recovery trades when it happens, right? The problem is everybody thought that the recovery was nailed on. Everybody was buying this, gosh, since May. And of course, now we've got these new variants, everything's spreading, and we're right back where we were. If I put fib retraces on, this looks like it was a pretty good level. And one of the best signs of a bottom, remember, is actually a double bottom. So it's sort of an 886, isn't it? Okay. So a double bottom here would be a quite nice bullish signal. We've gap lower, haven't we, underneath this 886 fib. This is the first time though. Well, we did. It's gosh, it's hard to buy when it looks like this. So let's go short term at what would a bottom look like. First off, if you buy a little, if we get above the 236 fib off the lows, that would be the first sign that we would have some more upside. And so that's 136.71. Short term, we got this big double bottom and then this littler one. Yeah, it's a really good level. We need to see a little bit more though. We need to see a bigger bounce. Above 136.71, I would say yes. If you were an Elliott wave, you would draw this as a channel and say, let's see this breakout of this downward channel. That would be your second kind of resistance place, wouldn't it? So here we go. Here's the top of our channel here. So your first target then, if you get above that T3, is the top of this channel, somewhere probably around, I don't know, 143, maybe 50% of the drop. That would be a good one. 144 is 50%. Next resistance, and then above 144 and a breakout from this channel, yeah, we probably have made a bottom and are going up again. So yeah, it's one of those maybe levels. Let's see. Today might be the low. You know, sometimes when you see these really weird moves on a Monday, sometimes we see a big bounce recovery. All right, so we've done those stocks. We've talked about the 10-year. We've talked about Bitcoin and Ethereum, and how Ethereum, if we lose the support in Ethereum, we're looking at $1,000 next fib support. Now let's talk about Ripple. Ripple had some good news in their lawsuit, didn't they? Somebody allowed to testify and say, really, Ripple should be going up, shouldn't it? Like, isn't that good news? It's frustrating that it's not. I'm going to have a bit of a chart cleanup here. This basically is still in a downtrend until it's not in a downtrend. If we look at our daily moving averages in Ripple, we're underneath them. Potentially, we've got some support here from this weekly 50 moving average, We might have a little look underneath it and then bounce. I don't trust these fib levels, so I'm going to move them to here because they haven't been working. So potentially this is also a retest of from this last swing as 786. Again, I don't really trust it, so I'm going to leave it at that. It is a really good support and resistance level. Let's take, say, from this high here. You can see that we are holding above, and so a retest of this level wouldn't be the worst idea ever. Does this come from the open? Yeah, it does. So around that 0.5 is really, really good support. A double bottom there would be a bit of a gift. If everything keeps heading lower, then a retest of these lows and maybe a slightly lower low at 0.5 in Ripple. You know, why do I think it might be a new low? Because when we look at this bounce that we made on the 22nd of June, again, we're looking for 5 waves up to say that it's over, and this was 3 waves, 61. So not yet the bullish reversal that we're looking for, unfortunately, in Ripple. Now, it's not falling as badly as some of the others, but you know, it's not that what we're looking for yet, unfortunately. Okay, let's look at a few more. This one, ICP, I was really hoping this. Anyway, everything is going down. When everything is going down, you just have to be patient. The good times will come back again. The most important thing is that you stay liquid and you still have an account when the good times do come back, so you can make some money. And that means no leverage. You know, if you're, you know, even if you stay in and in Bitcoin, if you know, whether you have 12 Bitcoins or half a Bitcoin, it doesn't matter. You'll still, if it goes down or up, you'll still have that amount of Bitcoins. Okay, so here's lit. This is one of those ones that potentially we could say is trying to make a bottom, but unfortunately we've got that same look. This is a daily chart, ABC, this says it was a correction. This was an equal measured move. We're underneath the 61.8. So 3.0093 for me is now resistance. And we're going to look at a minimum for 3 waves back from here. So 1 and down. When you have an ABC correction, like we've just seen, the most common retrace is to the 786. And so for this one, this would be back to 2.29 for this next leg lower. So that would be lit. Yeah, but not a reversal yet, unfortunately. XMR. Now let's take a look at lit, because somebody was asking for ones that are outperforming Bitcoin, and which ones are they worth being in? So lit Bitcoin, is this outperforming? Does this look good against Bitcoin? I think this looks here on the daily chart kind of deceptively good against Bitcoin, because we've got the same 3-wave corrective pattern, but we're holding above these daily moving averages. So it makes everybody think, gosh, maybe we are. Gosh, maybe we can keep going higher. We might, you know. We'd be very choppy and messy if it did. But yes, could it keep going whilst it holds above these daily moving averages? Yes, it could. It is outperforming. Let's take a look at the weekly. You're definitely better off in lit than you are in Bitcoin at the moment. Yes, I like this double bottom sort of swing failure pattern look here. I think that we've got room to go back to these highs and the weekly 20 moving average a little bit higher. And so yeah, I would say if you're looking for something, I'm not sure that this is a new uptrend, but it is outperforming Bitcoin for now. Let's take a look at next one. You want to look at XMR. XMR. Oops, not here. Here we go. Now, XMR obviously is, like everything else, having a bit of a struggle. The thing about this, if we look at our weekly moving averages, they're flat. And so against the dollar, this is more of a sideways range for Monero than it is anything else. So than a downtrend at the moment. In fact, I would say we haven't really been in a downtrend since that May low. What we've been doing is kind of ripples of sideways. Clearly, if we break this 181 level, we're going to fall another level. Now, so the question was, is this one going to outperform Bitcoin as well? Yeah. So this one pretty clearly had a 5-wave rally. 1, 2, 3, 4, 5, I think. And now we're looking for a 3-wave correction to be over for the uptrend to resume in Monero Bitcoin. I like how we're holding above the 200 moving average, but we've got a bearish cross of these daily 20 and 50, and this to me has a bear flag lick. So this says to me, I think probably one more swing lower before we bottom and going up again. And if I was to bet, I would say this third wave would be 61.8 of the first one, and so one more swing lower from here down to 52.50, or down to test at least that 200 moving average. So no, short term I don't think Monero is outperforming Bitcoin, and I think it's got another leg lower down to 0.0052 before it goes up again. So next one, no, that's not looking. What about Mana? Now Mana's one of those ones that really did, you know, outperform, got everybody excited, and then, you know, well, like so many of those DeFi coins. I don't know if I've got it here. Let's see. No, let's see. Okay, so we're going to take a quick look at Mana. Let's take a look at our weekly chart, because clearly we're being hit here after a pretty, yeah, 5 waves down. So we're looking for a 3-wave rally. That's not so cool, is it? So we've had the first leg up. We're going to look for a pullback and then another leg higher. The problem with B waves is they can last a long time, or longer than you think that they will. So I'm just going to see. Okay, I certainly wouldn't be buying this against the dollar, but let's see if it is outperforming Bitcoin, which is your question. No. Not, you know, we've got this consolidation, which it looks like it's losing the support. So I think, again, we need to see at least a 3-wave correction back, and potentially back to the 200 moving average here in this one. So we've gone down and then ABC, and so I think we've got a little bit further to go before we potentially find support here as well. We've broken this. 1627 would be the first place, and maybe 1439. So 1627 next, maybe support for Mana, and that's not outperforming Bitcoin either. Okay, and then you want Komodo and Lend. Let's just take a quick look at Komodo. So in the dollar terms, to me, this looks a little bit bear flaggy in Komodo. Not enough of a to buy it yet. Maybe it is accumulation, and we're building a base here. Certainly, I would be interested if we got above this daily 50 moving average, I would be very interested in a bigger bounce back to the 200 and maybe higher for now. But for now, just all looks, yeah, not a buy yet anyway. Okay, potentially this has got a corrective look. I'd like to see some strong moves higher from here, from this little bottoming pattern and above these 4-hour moving averages. Then yeah, I might be interested, but for now not. Let's see if it's outperforming Bitcoin though, which was your question. Yeah, it kind of is a quite interesting counter trend setup here. So not quite clear how this unfolded, and this may be, I don't think it's 5 ways up, but this corrective choppy overlapping pullback is very interesting. Yes, let's see. So the first thing I'd want to see is holding above that 236 fib. So I've gone from this high to this low. There's our 236 fib. It keeps tempting people, hasn't it? It's gone up and then it hasn't been able to close above it. So above 2231 for our close says we're going up again, and yeah, I do think Komodo is set for a swing higher to outperform Bitcoin, and I would like it. If it can't do that, it's going down though, unless it does that. And the reason that there are so few that outperform Bitcoin in a downtrend is Bitcoin does tend to outperform in a downtrend. So when we look at the Bitcoin dominance chart and we see it going up, when Bitcoin dominance is going up, it's usually because Bitcoin is in a downtrend. When Bitcoin is that great altcoin indicator, isn't it? So when F is outperforming Bitcoin, altcoins are outperforming, and when and Bitcoin is underperforming, and vice versa. You can see that this is in a downswing again after a really nice bullish move. So is there any chance that F might go up through the Bitcoin correction? It could, but it would be very unusual. I think what F is doing, which is basically sideways holding its own, is quite bullish compared to what we've seen when in other sell-offs, to be honest. Now, if we do this, maybe we get a swing and a bounce here. You see how each of these are 3 waves? So we've gone, this first one was 5, but 1. So we might see another one here. So this is, A, B, C. And then let's see. That would be a good look for this position here. We're in that 61.8, 38.2 sideways zone XD, where they call it the golden ratio zone. So if I go to the weekly chart and you look at this fibs from this high to low, in between the 61.8 and 38.2, it's where the market tends to consolidate and find its feet, and the bulls and the bears fight it out. So this is also properly nasty sideways. So yeah, I can add super Sarah, hi. I can do XTZ, yes, and VeChain. Hello, Shari. Yeah. So I got a few more on the list that I haven't done yet, so we need to zoom along. So KMD, we've talked about what we need to see for Komodo to outperform. Yes, I do think that that might happen. Let's look at Lend. Now, if we go to the weekly, Lend, it's looking pretty. So corrections are usually 3 waves, right? So we have a downtrend. Normally, you would expect to see that. Sometimes, though, you have a downtrend and they overlap or they go sideways. And sometimes you have one where this makes a lower low. So you go A, B, C, and then you continue lower. And that looks like a little bit what we've done here. Correction, another leg lower to come in lend. It's not looking very promising at all. But the only thing you can say is this is a sideways range. There is obviously pretty good support at the lows. Hello, Lewis. And potentially this is a wedge consolidation that we see a breakout of. But until we see that, I really wouldn't touch this. However, we're looking for something that's outperforming Bitcoin. That's what Matty wanted to see. So, is lend outperforming Bitcoin? It's not really, is it? I think we can have to say that since the start of the year, we've basically been going sideways. It's more like ETH Bitcoin than... is this a level where... This is quite a good look, I would say. Potentially, we could rally from here. This 200-day moving average. If we look at how we rallied here, which was quite strong and impulsive looking, compared to this correction, which was choppy and overlapping, then this would be a really good place to rally from. If this was like 50% back as well, I would say yes, potentially a really good place to get going from. But it's not doing it yet. So let's see some green. And I would say back above these daily moving averages, that's, the definition of a trend or a breakout from this declining wedge. Look for something like that as your buy signal. Don't buy it until then, because really it's going down until it does something to shout at you that it's going up. Okay, Sol, let's take let's do a couple more. So Sol, I'm sitting in the dark. Let's turn the light on. Gosh, this is... Another one where we're doing these 3-wave correction things. So 3 waves down, that says it was a correction, not a downtrend. 3 waves up, says we're not going up again yet. And so have we finished our final leg? That's the question. Remember, if you have a shorter leg, it's very often 61.8 of the first one. So if we measure them, which I'm going to do quickly here, we pretty much tagged it, didn't we? It's close enough. We might see a retest of these lows, but 19.93, I would say, is the support. Super guppy is quite an interesting one, yeah. I've looked at it. I don't use it personally, but I have looked at it. I'm a huge fan of Heikenash. If you want to do simple trend following for anybody who's watching and who's getting wrecked, recognizing when something's going up or down, if you use simple moving averages like these, I've got a 20 or 50, but you don't need those. You just need maybe a 100 or a 200. As long as the price is above those moving averages, we're clearly in a bigger uptrend. And if you look for pullbacks to those moving averages and you use something simple like a Heikenashi candle, which is a moving average on the color of the candle, and you wait for it, if you look on this daily chart, how many times would we have been tricked in Sol here and got it wrong? Here, did we come back and retest this low? Yeah, we didn't make a new low though, did we? So, you wouldn't have been taken out. And if you wait for it to go from red to green and you buy as close to, within a couple of candles of when it does that, you get really nice trades. So, but it works best in a trending market, not in a sideways chop. So if we wait for Sol to break out back above these moving averages again, or from this 200 moving average, if we got a really nice big fat green Heikenashi candle tomorrow, that would be a great looking reversal potentially. And if we don't, if it just stays red and we keep going down, we're still going down. I think honestly that doesn't meat fish. It really doesn't matter how good you, just the simple things, and the higher time frame the better. I really like a daily or a 4 hour. The 4 hour swings, you know, they give you trades that last a couple of days. When they go red again, we've stopped going up. And simple as that. So when you look here, it's called a Heikin-Ashi candle. That's all it is. It's a moving average on the candle that goes from red to green. Something as simple as that will keep you following the trend and will help notify you when a market stops going up. Okay, so Sol US dollar, potentially we're approaching a level where we could bounce from. There's no sign of it yet, unfortunately. And MATIC, another everybody's favorite. Let's see how MATIC is doing. I'm going to speed up a bit, or we're going to be here really late. And I've got hungry dogs. Okay. Let's tidy up my chart. So I put all these other indicators on, you know, but really simple is best. Now, clearly, we've lost all of our moving averages here in this one. When we talked about MATIC being a big measured move correction, this first swing, we tried to bounce from this 61.8 level, didn't we? And we couldn't reverse the trend. So here we are, and I think we're looking lower to 0.48. Maybe we bounce from this 200 moving average, but the equal measured move and these highs, this support and resistance here, I think is really interesting. And this might be more likely. So I'm going to tag them the most number of highs that I can there. So 0.48, I think we may have a little bit further to fall. 0.65 potentially support, 0.48 otherwise. Okay, next one we're going to look at is FTT. At some point, I actually thought this was going to go up forever. I'm sure everybody did. Usually when you think that is when it stops. And that's exactly what this one has done. If this 5 waves up was the 5th wave, so we have wave 1, 2, 3, 4, 5. Back to the bottom of wave 4 is the most common correction. So we have pulled back to the most likely support. When we look though, our weekly moving average is a little bit lower, 20. Let's put this on and try and draw where our fibs are and have a look at where we are. I'm just putting this into logarithmic scale for minutes so that I can, there. So this is one of those lovely 61.8 levels. When you lose it, if we lose the support, if we close below 24, we are likely to go to 14. That is a really big warning. Look at these moving averages as well on the daily. Look how we got underneath the 200 ABC. So this was a correction. Failed at the 200 moving average and we're headed lower. We really do have to hold this support in FTT. If you're holding it otherwise, if we close underneath these lows, we're going to go the next big fib level support. And look how this was a back test exactly of the 50. So this is looking at the fib levels. The next support is 14.4. So don't hodl it all the way down. Sell at least half. And then you can buy it back and improve your average price. Okay, so FTT, we really do need the support at 22 to hold. Okay, Dash. Now Dash, I'm going to have a quick look at Dash. Dash has had a big move today. Dash is one of those ones that does really well in South America and yeah, you know. There's always a story for Dash, isn't there? For why it does what it does. I'm going to clean up my chart. And we're going to say big picture in Dash. Here. we had a really nice rally that failed at that big, you know, 236 fib thing, the one that tells you if the trend changes. And we are underneath all of these weekly moving averages. That's pretty strong resistance. What I don't like is this tail. What I don't like how we've gone all the way up and closed back underneath again, because that says false breakout. And so, and then, you know, they are pretty nasty reversal signals. And because we would need to close more than, remember that thing about the equal measured move, so if this is our equal measured move, okay, we would need to close above here for it to be more than that. Otherwise it looks at the moment just like a correction, and we're back underneath this 50 moving average. So you need to carefully buy pullbacks in this one to see if it'll have another go. And if it gets back up here, makes a lower high, higher high, it's not happening, and get out. And here we are. Let's go to do that thing with the Heikin-Ashi. See how we haven't even had a red candle yet. You really do need to see some red before you can buy this to have another go. And be really cautious with it. This is not the bullish reversal we're looking for yet. Okay, it's potentially, a lot of people sold into the rally, let's put it that way. And so not quite enough to tell me a bullish reversal yet. Let's take a look at Super and Tel and Vet. Okay, Super. Oops. Fat finger. Now my mouse has disappeared. Hold on. I've got my Heikin-Ashi on. So let's take a look. Now, again, we're always seeing if we're going to see a new uptrend. We're always looking to see, have we got 5 waves? How does this swing measure? Are we going to hold the highs of this one? Maybe we have 5 waves here. And this was the wave 1. And if we stay above it, which then potentially this is support. But I have to say that back underneath these daily moving averages, it's not a compelling bullish argument for me yet, and this isn't clearly enough. Now, we are likely to see another leg, but underneath, if we put our fibs on from this low to high, we haven't been able to hold even 61.8, so 0.381 is where the most likely support is. 0.381, it might come all the way down and double bottom though. So I would wait and see if it holds and turns up high from there, and yeah, it's just come back a little bit too far to be compellingly bullish. You know, what you would want to see if this was is a more shallow ABC, 50% back, something like that, and that would be a much more, most bullish reversals start with a bit of a short squeeze, and so the pullbacks are shallow. They're not this really deep thing that we've got here, unfortunately. So yeah, I'm not quite feeling it yet. Whenever your daily moving averages are still lined up bearish, very often that means a retest to the lows as well. And so probably, I think we've got a little bit further to fall before this might be a bottom. So somebody's getting wrecked in Telcoin. Let's take a look at Telcoin. I'm going to look at it against Tether, because then at least we're comparing apples with apples. All of these popular ones, they've really got slammed, haven't they? No, I don't think these are working, so I'm going to take them off. So let's have a look at these waves and count them. Move that out of the way. 1, 2, 3 down. So this is a correction, or it looks like one so far. 1, 2, 3 up for our bounce, and then 1, 2, and these final legs are very often 5 waves and can extend in a bit of a declining wedge, and I think that that's what we're seeing here. So where is that likely to end? I don't think it even cares. It's just, yeah, that's not doing it, is that? So it's not looking at fibs, it's not looking at those. I think we're going to go back to old-fashioned, it's going down until it does something that tells us it's going up again. So the first signs of the bottom means a bottoming pattern. You know, V bottoms where you make a deep bot and then just go up and never come back again are very, very rare. More often than not in crypto, you'll see double bottoms all the time. You'll see the Bitcoin double bottom where it will make a low and then the next low will make a slightly lower low and then up it goes. Remember that false breakdown. And so that's what I would want to see for the first thing in Telcoin for it to be a low. Underneath this daily 200-day moving average is a little bit of a concern, but clearly there's a really strong support and resistance a little bit lower. Comes from these highs and this low here. Okay, and we haven't quite tagged it. It's a little bit lower. So the really good support is one more push lower. If I was going to pick a level where you are more likely to see a bounce, I think it's a little bit lower, 0.0095. And so maybe one of those swing failure patterns that tags that support, that would be what I would be looking for to see maybe if we could get a decent bounce going for Telcoin. In VeChain, let's take a look at VeChain Tether and then VeChain Euro. So remember, when the dollar is strong, VeChain against the dollar is going to look worse than VeChain against the euro. What we're doing here, and let's put regular candles, we're fighting to hold this support level. It's really grinding down this time, isn't it, though? And see how this rally here was 3-wave corrective. That usually points to a new low. And maybe back to this 0.05 level before we find support again. If we were going to do a 5-wave, that's what we would see here. Next support. So we've got two. We've got this 0.053 and then 0.039. In VeChain against euro, that is here. A retest of the low lows in this one. Got a bit less history, haven't we? Let's try, just want to see if... No. Okay. Okay. I'm afraid I think there's nothing between us at the moment really and this double bottom. So I think we have to hold on and expect. Now, I say all the time, when you draw a trend line, third touch is very often a false break. And the same is true of horizontal support lines when you draw them. So if we were to do that here, connect these lows, this third touch is likely to be a false breakdown. Why? Because a lot of people will buy against this double bottom and their stops will be quite tight. And so what the market likes to do is say, oh, thank you very much. Remember, a stop order on a long is a sell order. And so people are offering to sell it just underneath these lows. And so somebody's going to come along and go, oh, thank you very much. I'd like to buy it just a little bit lower there, and it should bounce, and it very often does. So I would expect us to retest these lows, and it may well be a false breakdown. And I'd look for a sharp rally to close back above this level. That would be a bullish signal for me that I would buy. And it's at 0.05. Okay, sorry about the dogs. Quick look at XTZ, and then I'm going to call it a night. And thank you for all the really nice messages. I'm really sorry that suddenly I clash with somebody else. I didn't realise, having been doing Mondays all this time, but let me see what we're doing. XTZ, aren't we? Don't think I've got it here. Let's Tezos now. Let's see where we are. So good old-fashioned, honestly, you shouldn't discount good old-fashioned support and resistance in crypto. It's where the buyers and the sellers all agree that it's a bit of a pivot. And if we do that here for this one against the dollar, we can see that probably, if we continue, that the support we are looking for is a little bit lower, 1.87 to 1.89. Now, if it's working well, it very often lines up with Fibonacci retrace levels. That says it's a little bit higher, potentially. So 2.04 down to 1.78, 1.79 is where our support zone is then, I think. Let me put that back on. And where we are likely headed back to. So between 1.97, 1.98 and 2, I think, is where XTZ is likely to find support. And again, what we've seen here is a three-wave rally. That usually means that we'll see a marginal new low at least. And so, yeah, one more new low in XTZ, I think, before we bottom. Sorry about that XD. Just everything's in a really nasty downtrend, you know. XTZ holders are the most miserable people in crypto. I don't know. I find, you know, here's the thing, when sentiment is really like this, when everybody's really depressed, and it usually means that a bottom is pretty close. The problem is that the broader markets are catching up. You know, we've been in a downtrend for a while in crypto. The broader markets are catching up, and we aren't really going to turn higher until everything does, you know, and sentiment improves. So Connor says you're looking for further in Ripple. Connor, it might well go further. I think 0.5 is just the first place that we're likely to come back to and maybe bounce from. Litecoin is a good one to HBE. Let's see, Litecoin is a good one to keep an eye on. And the main reason that I like to keep an eye on Litecoin is it tends to go first. So it'll turn up before Bitcoin does. So if Litecoin finds the bottom, I've got Litecoin Euro chart here. If Litecoin finds the bottom when nothing else has, it's usually a good sign that Bitcoin is going to follow. At the moment, still heavy in our downtrend in this one. I'm just going to switch to Litecoin. I usually look at the Coinbase charts for Litecoin. They have the most volume, so usually the most accurate charts. So yeah, okay, 108 against the dollar is the support I want to see hold on a retest, and we're headed back to retest it. A daily close underneath 108. I've got, I think we'll probably drop to 69. So watch out 108. A daily close underneath 108 would be really bearish. We would have another leg lower. And to look at this really good support and resistance here for Litecoin dollar. So I have not personally bought or sold VRA, but I have looked at the chart for VRA. I'm not sure what's going on in Veracity. Ooh, I don't like how it's broken this double bottom. If I was going to look at it, anything to buy it, I would need to see it back above this level, at least. Now that we're underneath it, that level could become resistance, 0.009. No, not a good look for Veracity. Uni and Sushi I will take a quick peek at, but these DeFi coins have had a really rough time. Particularly, there was one yesterday. I thought YFII had a little bit of a shot, but everything has gone to hell since then, really, hasn't it? So, oh, here, YFII. Okay, this one, I don't know why this one is outperforming, but it is. It's, you know, still going up. If we put our measured move on, it's gone beyond that. It's gone beyond that resistance. It's gone beyond that 50% target. This was my target. So I had a bullish target for YFII here, first target. It's gone beyond it. Second target for now is 3,041. So, like, if I had to pick one coin out of everything that I had would sit in, I would say probably YFII, and I don't know why it's going up, but it is, and that's against the dollar, this chart. So sorry, you asked for sushi and cake. Okay, cake is here. Okay. Pretty tough sideways range in this one. It went a little bit higher than I thought it would, which was impressive, but not quite enough to get us out of trouble. We've got flat moving averages, and when you've got flat moving averages, it means sideways range. So here we've got almost a double top, haven't we? Here we've got a double bottom, and in between, honestly, there's nothing doing. Unless we get back above this 50 moving average, which has capped us twice, I think we are more likely to retest the lows again at 9.5, maybe 10, then go up. Unfortunately, it's just not. This is the problem. This first one said that this whole sequence is corrective with this 3 waves. So still in a correction for cake, looking like it could retest the lows. Cake against BNB. Is cake outperforming BNB is what you want to know. It's pretty flat, isn't it? I would say no. No, and underneath the 200 moving average, I'd rather be in BNB than cake. No. And I'll take a quick look at sushi, which is still in a downtrend. Now, there were two levels. If we were going to do this sort of really nice equal measured move thing here in sushi, this was the support level that we should have held, and we tried. Now we're underneath it. Look, when we bounced, it's resistance. The next support is at 545. Let's see what happens there. 5.38 to 5.45. So further to fall for sushi. That's a weekly chart. This daily chart looks like a bear flag to me. So I'm only going to be buying it back above 9.3, and at the moment I think we're more likely to head to 5.3. Okay. Nobody's nailing it in the moment in crypto, honestly, unless you're on the short side, unfortunately. So, okay, I will be back next week. I will try and post update videos through the week or some charts. But again, really, until these markets say we've bottomed, we're going up, assume that we're still going down or sideways, which is worse.